Welcome to the Friday edition of the Tech Stocks Daily Podcast, where we're diving into this week's roller coaster ride in the tech world. Today, we're peeling back the layers of AppLovin's stock plunge amidst sizzling allegations that would rival a Hollywood thriller. Get ready to explore why Duolingo's impressive earnings just didn't cut it for Wall Street, leading to a dramatic drop. We'll also celebrate Verizon's steady dividend announcement, something stable in this swirling market vortex. And don't miss out on the futuristic tour de force by Google as they sprinkle AI magic over healthcare and beyond. Stay tuned for these sizzling stories and find out what they mean for savvy investors like you. All right, folks, let's dive headfirst into the exhilarating world of tech stocks and check out why AppLovin has been making waves today. Buckle up because it has been a roller coaster for AppLovin on the NASDAQ, and boy, do we have some juicy details. So AppLovin, the prodigal son of mobile app technology, has had its stock tumble down a whopping 22% this week. Why, you ask? Let's tap into this financial whodunit. It all started with a couple of short sellers, Fuzzy Panda and Culper Research, publishing reports that cast a bit of shade over AppLovin's glowing reputation. Picture this, AppLovin had raced through 2024 as a top-performing tech rockstar, boasting a jaw-dropping 714% increase. But suddenly, it hit the skids after these short sellers accused the company of some pretty serious misconduct. They claimed AppLovin's Axon 2.0 digital ad platform might have been playing some James Bond-esque tricks, artificially inflating ad sales with shenanigans. According to these reports, there's stuff like reverse engineering ad data, allegedly from Meta platforms, that's got everybody whispering. And the plot thickens. The suspicion got even more intense when accusations surfaced that AppLovin was making backdoor deals with mobile handset and network companies, slipping its software onto devices without user consent. Nefarious, right? Well, that's exactly how CEO Adam Foroughi saw it, as he fired back in a blog post calling these claims a bunch of hooey made to drag down their stock price for some short-selling fun. He insists that AppLovin's AI marvels are on the up and up, adhering to legal and ethical standards. With the short sellers throwing these bombshell allegations, AppLovin investors were left in a bit of a quandary. This situation was further complicated by the involvement of the law firm Bragar, Eagle & Squire, which kicked off an investigation into whether AppLovin has been playing fast and loose with federal securities laws and other business practices. Yikes. Despite this drama, the parallel universe called the growth stock sector has AppLovin in a different spotlight. The company's numbers are, frankly, drool-worthy, with a zippy earnings growth and expectation-busting projections for this year. It's been doing fantastic in utilizing assets effectively, grabbing investors' attention even in these turbulent times. For growth-focused investors out there, AppLovin is being pegged as a dazzling gem, with its growth score gleaming brightly. Regardless of current share price wobbles, figures like projected 51.6% EPS growth put it ahead of industry peers. In conclusion, folks, AppLovin's mixed day in the news gives us everything from intrigue and tension to numbers that get mathletes excited. Stay keenly observant with this tech sensation, because whether it bursts back into prominence or faces more hurdles, it promises one heck of a story for any tech enthusiast. Stay tuned and keep your eyes sharp, because as any savvy stockholder knows, you gotta know what you own. All right, techies, let's unpack what's been going on with Duolingo, the language learning app we all love, yet sometimes feel guilty for ignoring those incessant practice reminders. So, Duolingo's been making headlines today, and not just because of their quirky owl mascot bombarding you with time-to-practice notifications. Their stock saw a serious dive, plummeting a dramatic 14.6% as traders spilled their lattes in panic mode Friday morning. What's the tea? The drama started despite Duolingo's Q4 sales performance beating Wall Street expectations. They reported $209.6 million in sales, surpassing the anticipated $205.5 million. Impressive, right? However, what's muddling the mood is the way these earnings are reported. To get the whole picture, you'd need to go on a digital archaeological hunt through the SEC's website for the Q4 shareholder letter. It's like a treasure map. Only the X marks downgrade town for earnings growth, which rose only 15%, much lower than what some optimists hoped. Now, here's a little twist. Despite seeming quarterly disappointment, the plot thickens with a pink cloud for the year-over-year earnings report, rising a jaw-dropping 450% compared to the previous year. Total earnings stood at $88.6 million, enough to buy a whole fleet of Tesla Model S if you felt like it. Why is there a frown then? Blame it on missing on EPS targets and FY25 guidance being more conservative than a chaperone at prom. The shares took a beating thanks to a checksum enigma of just $0.28 per share versus the $1.09 many Wall Street oracles had envisioned. However, investment analysts, like our good friend Ryan McDonald over at Needham, saw silver linings among coding clouds and have adjusted Duolingo's stock price forecast slightly upwards, firm in bullish faith for the future. Why? Well, Duolingo's strategic moves in strengthening AI capabilities and future projections that show a steady revenue increase signal there's more to come from this colorful brand. And finally, there's trouble in paradise thanks to generative AI costs gnawing on the subscription margins, contracting their gross margin by about 120 basis points to 71.9%. Yet, the total bookings shot through the celestial spheres with a year-over-year increase of 42%. To cap it off, Duolingo remains committed to its roots and feels confident with upcoming features and investments in engaging their expanding base, with nifty things like video call to ride the rocket of the much-fabled Duolingo Max creates. In the game of chutes and ladders known as the stock market, Duolingo tumbled down the chute today. But it's eyeing ladders for future climbs by betting strong on AI and widening the reach of its learning ladder. Stay tuned. This bilingual roller coaster isn't finished yet. Today, let's dive into why Verizon Communications is making waves in the tech news scene. Verizon, that colossal communications behemoth based out of New York City, has patrons glancing at their portfolios with glee as it announced its quarterly dividend details. That's right, folks. Cash in your pockets, or at least, maybe that extra grand mocha latte if you're a shareholder. The board of directors at Verizon declared a quarterly dividend of 67.75 cents per outstanding share. Now, I know what you're thinking. Oh, 67.75 cents, big whoop. But steady those financial horses, because being consistent is a big deal in the stock world. Those earnings are going to be flying into shareholders' pockets come May 1st, 2025, for all those who seal the shareholder deal by April 10th, 2025. On the performance end, Verizon has more than a little pep in its step. Over the past year, Verizon doubled its wireless postpaid phone net additions compared to the previous year, bouncing along like it's their lucky day. And get this, they're also gobbling up broadband market share with their Fios and fixed wireless access like a tech version of Pac-Man. Affordable and reliable internet is their jam, and they're spreading it thick. Those strategy moves aren't just randomly planned feats either. Verizon's growth aligns with their financial guidance plan for 2025. Nothing looks merrier to the investor's eyes than when a company stomps confidently towards guidance goals. Hans Vestberg, CEO of Verizon, seems to agree, throwing confidence around like he's dealing a deck of cards at a Vegas casino. With a mature business model and a portfolio bolstering strong cash flows, who wouldn't say kudos? Additionally, it's noteworthy they've been like marathon-running dividend increasers for a solid 18 years in a row, enhancing Verizon's status as a robust and reliable custodian of its stakeholders' financial faith. This status is quite the hook when chatting up potential investors. From the financial scoreboard in 2024, Verizon raked in revenues upwards of $134.8 billion, with 4.2 billion shares blowing in the corporate wind and having dished out over $11.2 billion in cash dividend payments last year. Verizon is not just talking a big game in the US. Their influence and connectivity are resonating globally. Verizon's mission has always been empowering folks in how they live, work, and play. Thanks to their formidable team that keeps that innovation engine humming at breakneck speed, they're continually charging toward not just meeting, but acing customer expectations. In the end, whether you're hashtagging your love for them or just reaping dividend goodness, Verizon is certainly the well-oiled machine zigging and zagging in today's dynamic telecom world. Feel free to take a step back and marvel at how they're redefining what's possible in connectivity and technology. Boom. That's Verizon's strategy in a nutshell. Hey tech enthusiasts. So, what's Google been up to today? Grab your favorite snack and let's dive in. First up, it's all about a fantastic new partnership with Deliver Health. Google's teamed up with Deliver Health to sprinkle a bit of their generative AI magic onto clinical documentation. This partnership is designed to make the lives of over 60,000 clinicians a whole lot easier by allowing documentation to be done entirely through voice. We're talking voice-generated operative reports, lab result summaries, the whole jazz. Pretty soon, docs might just be saying, "Hold your stethoscope, let me document that," using just their voice. Deliver Health will integrate Google Cloud's advanced Gemini AI into its eSON Instanote platform, creating a medical vocabulary powerhouse for speech recognition that will save clinicians a ton of paperwork time and hopefully help with some of that notorious burnout. And don't worry, Google assures us that patient data remains under tight lock and HIPAA-compliant key. Now, speaking of AI-induced excitement, Google itself is buzzing with some sizzling tech strategies with generative AI at their core. Alphabet, Google's parent company, views generative AI not as a threat, but as a golden opportunity for growth. We're talking about a variety of AI products, with Google Cloud a big beneficiary, a jaw-dropping 30% revenue increase in Q4, thanks to the demand for AI solutions. Enter Google's innovations such as Vertex AI Studio for rapid prototyping of AI models, and check this, AI Overviews in Google Search, which offers AI-summarized search results. Alphabet CEO Sundar Pichai has been raving about how much people love asking the AI search questions. Who knew AI could make searching more fun and maybe even save a few brain cells? And for anyone who's dreamt of futuristic interactions, Google's Project Astra and Project Mariner are major talking points today. They're on a mission to make autonomous AI agents a reality on smartphones and smart glasses. Imagine having your own digital buddy figuring out tasks in browsers while you sip your morning latte. But wait, there's more. While heavily embracing these AI capabilities, Google isn't neglecting its core area, advertising. By using AI to optimize advertising campaigns on platforms like YouTube, they've managed to deliver some impressive results, with more bang for those precious advertising bucks. It seems like Google's vision is set on the horizon of things like agentic AI and maybe even artificial general intelligence, which could become one of the greatest tech wonders of the next decade. Ooh, what a rundown. So are you excited about Google's role in the future of AI and medical technology? Are you nervous or hyped about agentic AI popping up on your smart devices? Drop your thoughts down in the comments. I can't wait to hear what you think. Remember, the future's creative, clinical, cloud-based, and very, very Google. All right, tech-savvy folks who love a good market thriller, let's zero in on Verizon today and see if it's worth pressing the buy, sell, or hold button. Given the juicy news about Verizon's sweet quarterly dividend announcement of 67.75 cents per share and their steady march towards growth ambitions, this stock looks like a solid hold. Here's why. 1. Dividend stability. Verizon's reputation as a consistent dividend payer is stellar, and with pretty pennies piling up in shareholder pockets come dividend day in 2025, holding on to Verizon might feel like savoring a financial latte with extra caramel, smooth and rewarding. Number 2. Strong operational performance. Verizon's doubling of wireless postpaid phone net additions and expansion in broadband market share reflect robust operations. Like a well-tuned symphony, Verizon is hitting those growth notes in harmony with investor dreams. Number 3. 18 consecutive years of dividend increases. This record is kind of like diving into a never-ending Netflix series, satisfying and bound to continue impressing. Financial stability and stellar cash flows are investor hearts' favorite sequences, keeping expectation beats aligned. 4. Global influence. With over $11.2 billion in cash dividend payments distributed last year and impactful revenues upwards of $134.8 billion, it's clear Verizon's influence zigs and zags through local and global markets alike, offering an edge even in challenging times. 5. Upcoming investments. Verizon isn't resting on its laurels. They continue powering up what's possible in connectivity. Whether it's growth projections they're acing or their innovation journey, there's plenty of juice fueling the engine. Thus, with such a dynamic and empowered move toward new horizons, Verizon stock sings a hold song to those enjoying consistent returns, reliable dividends, and transparency on achievements yet to come. But remember, I've given my take from the tech autocratic throne after the buzzy vibe today, but always pledge allegiance to doing your own research. The stock market's a dance floor with infinite possibilities, so know your financial moves and comfort levels before jumping. May your portfolios dazzle and your dividends thrive. Wow, what a whirlwind of a day in the tech market. We've seen AppLovin in the spotlight with a staggering stock tumble amidst explosive allegations, Duolingo navigating the ups and downs of earnings expectations, Verizon celebrating steady dividends and robust growth, and Google unleashing potential with cutting-edge AI innovations. It's an ecosystem of thrills, spills, and promising strides. If you enjoyed today's market deep dive, make sure to hit that like button, subscribe for more sizzling tech news, and share it with friends who love a good stock tale. Be sure to tune back in on Monday for more tech buzz and market magic. Have an awesome weekend, everyone.